What is going on, everyone? We're back again with another video, and in today's video I'll be going over a trade breakdown on ES buys, and this will be an overview of internal range liquidity to external range liquidity, incorporating time frame alignment. But before we get into the video, I want to talk to you guys a little bit about the prop firm breakout trading that I have been using for quite some time now. So starting off the video, I have the S&P 500 on a daily chart, and like I've done in previous videos, I just want you guys to analyze this chart and just kind of make annotations before I show what I have on my end. But you can clearly see that the S&P 500 and indices in general have been bullish for quite some time now. So our order flow is bullish in the direction towards all-time highs. Now, adding the annotations that I had on my chart, you can see that I measured a dealing range from this swing low to this swing high. And if you understand my previous video based off of external and internal range liquidity, we had price take out this external range high and then price retraced, reaching down into this discounted internal range for value gap. And then after we reached that, price pushed up, reaching and failing to crack above this swing high of our dealing range, retracing back into this discounted internal range for value gap. And as you can see, after we reached the internal range for value gap that's in discount, we reached external range liquidity. So obviously in my previous videos, you know how the market moves. We move from external range liquidity to internal range, and then from internal range to external, and the cycle repeats on and so forth. It will come to your understanding that this is a very easy and simple understanding to how the market books price. But before we get into the next slide, what we're going to be doing is analyzing price as we get into this discounted internal range liquidity pool, because we're going to be utilizing time frame alignment with starting our daily chart, and then we're going to be looking at our hourly chart based off of the reaction inside of this daily key level. So here's the view of our hourly chart on the S&P 500, and I have a list right here starting off. This is step one, identifying our key level, which is our daily discounted bullish for value gap. And then you drop to your hourly chart to watch the reaction off of that POI. So what I'm doing is I'm checking for market structure to align with our drawn liquidity to these external range highs. So narrowing it down even more, after we drop to our hourly chart and we wait for the reaction after the reach of our POI, which was this discounted fair value gap, we wait for a proper retracement after a shift in market structure. So we had price close above this last up close candle, and we retraced into the hourly bullish breaker block. And as you can see, I marked off the time. This was the start of the PM session during New York. Now there's two things that you can technically do here. One, you can either enter a position long off of the hourly chart based off of the hourly POI, which is our bullish breaker, and then you could do a take profit to 2 to 2.5 standard deviations or the external range highs. And if you did enter off this hourly breaker with a stop loss at the swing low, that would technically be a 1 to 2 or a 1 to 2.25 risk to reward, which is still a good trade. But if you would like to refine the trade even more, you go from your hourly chart to a M5 chart and you look for the reaction off of the hourly key level, just like how you would look for the reaction off of a daily key level for the hourly. And this is our time frame alignment, what I'm speaking of. Daily key level, look for the hourly reaction off of that daily key level. Now we have an hourly key level, this breaker block, you look for an M5 reaction. But like I was saying, if you wanted to execute, this is exactly what your position size with stop loss would look like to the external range highs. And you could even see here we had SMT divergence with NQ at that daily key level. So we had SMT at a daily key level, we had an hourly shift in structure. We created an hourly bullish breaker block. Now, if you want to refine it even more, you drop down to the M5 chart and you look for the reaction off of the hourly key level. So that's what we're going to look at now. So we're looking at the M5 chart and the hourly key level, which is the breaker block. And like I said before, we had SMT at the lows inside of that daily bullish fair value gap. So that was our step one, and then we waited for the hourly shift in structures, which is what we got, and then we had price retrace down into that hourly bullish breaker block. Now we're doing the same thing, but we're dropping time frames. We're trying to refine the entry. So we're looking for SMT at the key level. We have SMT at the lows here with NQ off of that hourly POI, and now we have a M5 shift in structure off of that hourly bullish breaker block. I used also standard deviations, measuring from this swing high to this swing low, the low that ran these lows and created SMT inside of the hourly breaker block as well for our standard deviations and projections of price. So I listed here on the left, these are the rules that apply from the daily to the 1 hour for the hourly to the M5. One, you look for SMT at the hourly POI level. You wait for a reaction and shift off of that hourly POI, which is what we got here, closure above. And then you want the confirmed shift and execution off of the breaker. And as you can see here on my futures chart, my entry was long based off of what I viewed on my MT5. And if you could see here, look closely, you could see the wick tags the M5 breaker. And that is exactly where I went long at. And I'll always say it's best to take the biggest piece of your position off at the 1 to 2, because that's what I shoot for in regards to risk to reward. And then you could leave a runner or a piece of your position off to higher targets, such as this external range liquidity pool. And fast forward to the completion of the final take profit, which is that external range liquidity pool. You can see we reached there smooth and sure. And I want you guys to understand that this is literally all I trade. I look for, one, the SMT divergence at the daily, weekly, or monthly key level, and then I drop time frames based off of what my daily, my weekly, or my monthly is telling me. So if it was a weekly chart, I'm dropping down to the 4 hour for structure. If it is a monthly chart, I'm dropping down to the daily for structure, and so on and so forth. But in this case scenario, I watched for the daily bullish fair value gap that we had here, then dropped to the hourly chart to watch market structure line up properly, and I paid attention to the reaction, and our reaction was clear. We got the market structure shift. After we got the market structure shift, we retraced, reached into that hourly bullish breaker block, which one, you could have entered off of, or two, you could drop again to the M5 to frame a market maker buy model off of that hourly POI, and this could have been your final result. So pretty much if you are in trend and playing along trend with order flow, and you're on the right side of the market and you're identifying your draw on liquidity and your higher time frame bias, your weekly bias is all proper. If you use these concepts, external range liquidity, internal range, and your proper time frame alignment, then you will have no problem making these same executions and being on the proper side of the market. It is a very simplistic and easy to view process of how to understand where resting liquidity is and where and when I should be executing my trades based off of. And I will continue to break down these trades more and more and more, just so that you guys can get a better understanding as to how these examples play out and how I analyze them live in time. But I hope you guys really did enjoy the video. Every single Wednesday, I'll either do a trade breakdown or I'll do some sort of educational based content. But I look forward to seeing you all during my live streams on Kick. I'll have that link in the description of the video. You can ask me questions or anything miscellaneous. I just like to hang in there and connect with you guys. But I honestly hope you guys have a great rest of your week. Good luck, good trading, and I'll see you guys in for the next video.